The S&P 500 is breaking below our diamond topping formation exactly as we predicted on yesterday's video. This can lead to disastrous outcomes. Please watch until the end of this upload because what the S&P does directly influences Bitcoin. Speaking of Bitcoin influences, I just wrapped up my live stream, which was the full coverage of Kevin Warsh's second ever FOMC press conference that turned out to be massively hawkish. President Trump supported Kevin Warsh because in his belief, Warsh would deliver lower rates. Not at all is our understanding from the things that he discussed about. The US 30-year yield has spiked to areas not seen since the 2008 financial crisis due to things that were said. So in today's video, we will talk about two things. One, Kevin Warsh. Two, S&P breaking down. It's quite concerning, and the impact it may have on Bitcoin and cryptocurrencies. If this video sounds interesting to you, please do me a favor and subscribe to the Crypto Kid channel because we're here every single day delivering alpha, and destroy the like button. We have yet again a phenomenal campaign from one of our partnered exchanges, BTCC. By going to the first link in the description down below, you will get a chance of winning an iPhone 17 Pro Max if you enter the top 5 users with highest trading volume. This campaign has something even cooler, which I will talk to you about on tomorrow's video. Make sure to check out the first link in the description. Sign up to get prepared for all the awesomeness that BTCC want to provide the Crypto Kids community in celebration for their 15th year in operations. Check out the first link in the description down below if you'd like to participate. With that, we say thank you to our sponsor and commence with the things that Kevin Warsh has stated in the second FOMC meeting, which he was in attendance of. So inflation, 2% is the target, not 2.1%, not 2.2%, not 2.3%. FOMC board members, some of them, were spreading rumors that the Fed may be okay with a inflation range instead of a particular hard line of a 2% target. Kevin Warsh put those rumors completely in the trash by saying 2% is final, and we will do the best we can to deliver a 2% inflation. How will they deliver on that? Well, with interest rates. So you know how Kevin Warsh speaks. He wants to give no forward guidance whatsoever. But even with a no forward guidance, politician-esque way of answering press's questions, we were able to deduce exactly what he was trying to state, which is, in my opinion, rising rates in September by roughly 25 basis points. 9 out of 12 board members voted for keeping rates the same for our current conference, with 3 of them saying we should hike rates. That was Kashkari, that was Hamak, and 1 other Fed board member. He referred to the US 2-year Treasury as the market expectation of where the rates should be, the Fed rates should be placed at. They want to reduce all Fed influence on the US 2-year, i.e. retail expectation of where rates should be. That is 75 basis points above where the Fed funds is sitting at right now. He couldn't say this is the metric we will observe and do accordingly, but he highly hinted that this is what they're keenly analyzing to make decisions on where the rates will end up in September and beyond. 75 basis point hike is the expectation. I think they will settle for 25 basis points, and then we can approach it on a meeting by meeting basis. He clearly stated that tougher decisions are going to have to be made. What is tougher decisions? Restrictive monetary policy. Restrictive monetary policy. Guys, Warsh does not care that the US 30-year yield is at highest level since 2008. President Trump set the expectation that Warsh may want to help out with the Treasury and fiscal policy to try and solve the $39.7 trillion national debt problem. The higher American debt interest rates are, bond yields, the tougher it is for them, for America, is to repay their $39 trillion debt. With trillions needing to be refinanced this year, the Fed not helping out the Treasury and fiscal policy must be enraging the Trump administration. In a nutshell, ladies and gentlemen, very hawkish meeting. Bitcoin didn't move so much because our expectation was that they wouldn't be cutting the interest rates. They would be keeping it where it is. They wouldn't be hiking either. Since we met that expectation, Bitcoin refrained from producing significant volatility. Warsh confirmed the market's expectation of hiking rates, and that confirmation also made Bitcoin not produce much volatility. If we're taking a look at the 4-hourly, then I'll remind you of our key levels. Point of control 63.9. Incredible support at 62.7. If 62.7 is lost, then you don't have much bidders keeping you away from the 59.1 territory. We should not lose 62.7. Don't have much more to commentate on the short-term price action. You know that my summer rally belief persists towards the end of the second week of August. We can chat on tomorrow's video with more details on Bitcoin primarily. I just want everyone to understand this breakdown from a diamond top on the S&P is literally validating our entire thesis that the S&P will enter into a Q4 correction. We're following 1996 to dot-com bubble technical analysis, like with over a 90% correlation. What happened in the dot-com bubble? You plummeted in Q4. When the S&P plummets, what does Bitcoin do? It plummets more alongside with it. It plummets more alongside with it. Q4, nonetheless, isn't too bright for me, for traditional finance, for Bitcoin, for cryptocurrencies, and the Fed hiking the rates by 25 basis points will be the perfect narrative, or 50, to say, okay, this is the reason why everything is dumping. And, you know, just one more extra piece of evidence which adds to our S&P crash Q4 theory. The S&P had a 10 to a 20% correction starting August to September of the last 3 midterm years. So put 1996 to 2001 completely out of the window and focus on the 3 bear markets, the 3 midterms in prior history, and you will know that from August, September onwards, you experience a major drawdown into Q4. It's looking terrible. I wish I could short this thing because I would short it. But I need to figure out how I can short an index. Maybe it's incredibly stupid of me and I'm not realizing the very obvious. And maybe it's even available on cryptocurrency exchanges. I will check that out tonight and let you know my findings on the next update video. Thank you so much for watching. Take care, crypto kids, and I shall see you extremely soon. Bye-bye.